Hey, it's Sam Fikel from Evergreen Home Loans, and if you didn't know, in most purchase transactions, an appraisal is almost always required. An appraiser serves two important functions. First, they're going to determine the value of the property. They're going to do a comparative market analysis of similar homes that have sold in the last 12 months and use compensating factors to determine an ultimate value of the property that you're looking to purchase. And second, they ensure conformity. The loan types, FHA, VA, USDA, conventional, which is Fannie Mae and Freddie Mac, different loan types have different requirements for what the property must have or not have, different property requirements. And how else are they going to know that the property conforms to their requirements without having a neutral third party, like an appraiser, go out there and make sure that it conforms? So an appraiser serves two important functions: valuation and conformity. There are instances, though, where an appraisal can be waived. And this is like hitting a gold mine. Seeing that green check mark will literally make me jump for joy, and I will I don't know what to do with my hands, and it's like the best thing ever, because oftentimes appraisals can be the bottleneck in the transaction with having long turn times, and it can make or break a deal sometimes if it values lower than the purchase price, or if it has additional requirements, things that need to be fixed. And so an appraisal waiver is like the best thing that can happen to ensure a smooth transaction. And so it really is a great thing. So this video is designed specifically for listing agents and buyer's agents to help you know whether or not the property that you're listing or the property that you're looking at would be eligible for an appraisal waiver. So first, it has to be conventional. Government purchases like FHA, VA, and USDA always require appraisals. But for conventional, they allow it to be done with 20% down. So Fannie Mae and Freddie Mac will allow you an appraisal waiver with 20% down. Also, it has to be a single unit residence, one unit. So no multifamily, so 2 to 4 units, and no manufactured homes. It can be a condo, and it can be a stick-built single family, but no manufactured homes or multifamily. And also, the occupancy can be either primary, second home, or investment. It doesn't necessarily matter what the occupancy is, but if it is an investment property and you're using the prospective rent to help qualify, that's a no-go, need to have an appraisal. If you're getting an investment property that's a single family putting 20% down and you don't need prospective rental income to help qualify, then there is a chance that you can get an appraisal waiver, okay? So those are the basics: conventional, 20% down, single family. Pretty easy, right? Here are some instances where the appraisal waiver is not possible, and this is probably a better list to know. First, new builds. Oftentimes the reason why we can get an appraisal waiver is because it's going off of a previous appraisal report. And if a new build if a structure is being newly built, then there's obviously no prior appraisal report on it. So new builds are not eligible. Multiple units, manufactured homes, I already went over that. Renovation loans, when the lender is looking at how much the property would be worth with the renovations included, an appraisal needs to be done. So no renovation loans. And transactions using gifts of equity, which is where one family member helps out another family member that they're selling to with a gift of equities to help out with the need for down payment and closing costs. An appraisal is needed there. So that's about it. There's a couple smaller, less common requirements for an appraisal waiver, so those will be listed out somewhere in this video. But otherwise, those are the basics, okay? Now, how do we know that we have an appraisal waiver? With every transaction, we have to run the file through an automated underwriting system. This automated underwriting system takes an overall risk analysis of the entire file, so it's really important to make sure everything's input correctly, and comes out with either an approval or a denial. But basically, we have to run the file with a complete address. Now, in order to put the complete address, we have to be under contract. So it's not like we can look at the property and input the address, because then it would be a complete application, which you need a contract for. So unfortunately, we don't know if there's going to be an appraisal waiver until after the seller has accepted the offer, just so you know. Other than that, as long as it's a single family putting 20% down, that's the only requirements. It doesn't look at credit score, it doesn't look at debt to income ratio, it doesn't look at the borrower's ability to qualify, it only looks at the property itself. So I hope that that was some really helpful information for you, and maybe you can have some better odds with submitting an offer now that you know whether or not the property may be eligible for an appraisal waiver. Talk to you soon.